Hello and welcome to the CNBC TV 18's Mumbai Newsroom. I'm Sonal Bhutra and with me is Ekta Batra. You're watching Mutual Fund Corner. Well, Ekta, usually we talk about a category, we try to explain it to our viewers, but today's show is all going to be about individual queries. We've got a lot of them.
Hi Sonal, yes, it's such an active market and hence obviously there will be a lot of queries from investors who are looking to deploy more funds or what to do with their current investments as well. Joining us today we have Anand Dalmia, who's the co-founder and chief business officer at Fisdom, to answer all of your mutual fund queries. Anand, hi, welcome to the show. Well, let's get going in terms of the first question that we have. We have Mayank Gupta, who writes to us from Indore. He says small cap funds usually look enticing when compared to other categories and returns they generate. He wants to know if it is in fact a good bet considering the volatility in the market. How would you answer that, Anand, considering that the BSE small cap index, the mid caps, all of these indices have gone up anywhere between 13 to 14% this year already?
Look, Ekta, if you look at history also, I think, small caps do better than the large caps. But one has to look at his risk appetite and the tenure. I think these two things are very, very important. So as you know, small cap is essentially, from market cap 251 to 500. And if you look at the last 1 year, they've given almost like a 10% extra return. If you look at the last 3 years, they've given a 15% alpha over the large caps. So yes, it is exciting. One wants to be a part of it. But, the tenure here is very, very important. Now, there's a very good point around volatility and how do we take care of that? So risk, your risk is very important because, here in small caps, there can be volatility. But a good way to accumulate that is, maybe through SIPs. Try and accumulate every small bits every month rather than, going whole hog at one time. And if you are patient and if you can invest for the long term, I think, you are bound to make alpha over the large caps.
Okay, so it does require patience and a lot of research and expert opinion as well if you're investing in the small cap space. Anand, but we do have different queries across segments as well. And the next one is from Krishnadas TV, who's writing to us from Karnataka. He has invested actually in number of funds. In fact, if I look at the portfolio here, he's invested in Axis Long-Term Fund, Equity Growth, there's Aditya Birla Tax Relief Fund, Birla Sun Life Digital Fund, and he wants to know if his current holdings need any changes. What's your take here? Because you do have a digital fund here, there is tax relief, different categories.
So, I think, Krishnadas, you've done a good job of, diversifying your portfolio. However, so if I look at your portfolio, there are a few ELSS funds, the tax saver funds. Now, generally, these funds have a 3-year lock-in. So if there is a lock-in, you can't do anything about it. You can't rebalance. But assuming it is out of the lock-in, then, you can try and consolidate the 4 into 2. You can look at maybe ABSL and IDFC, which is now Bandhan. So you can consolidate there. I also see a balance advantage fund. Now, again, I don't know your risk appetite, and I'm assuming you've not made these investments for asset allocation because that's the only fund that you have which has any sort of a debt allocation. So if that's not the reason, then you can maybe shift it to a flexi cap, a Parag Parikh flexi cap, because it will also give you some exposure to international investing. So you can do that. And then I see a few thematic funds. I think those thematic funds are good, again, if you're a long-term investor, because some of them can be cyclical. We're seeing that with the digital fund. You have a large cap fund. Again, I'm a big fan of passive when it comes to large cap. So I think you can look at an index fund. It will be more cost effective if you want to invest in large cap. And the last is you have a few, flexi cap and multi-cap funds. Again, if they are out of their exit load period, which is 1 year, you can consolidate them. Maybe you can choose an iPro flexi cap for the flexi cap category and an SBI for the multi-cap category. So that's what my suggestion would be.
Okay. Well, you did mention Parag Parikh Flexi Cap, and the next query does have that fund in the query. We have Janali Jaya Durga Devi, who writes to us from Assam. She's invested around 5,000 each in Parag Parikh Flexi Cap Fund, Kotak Emerging Equity Fund, and SBI Small Cap Fund. She wants to know if she will be able to raise a corpus of around 5 crores in the next 31 years.
I should really compliment you because, you've chosen 3 funds which give you a lot of diversification across market cap. So you have large cap, mid cap, and small cap. And given that you chose Parag, you have international flavor to it as well. So that's really well done. I think, look, if you assume for 31 years, again, amazing to see that you want to be invested for so long. And even if we assume a very moderate sort of a growth of 12 to 13%, while one can assume more than that, given the diversification across market caps, I think you'll reach your 5 crore target. However, I just want to clarify that, look, if your today's target is 5 crores, after 30 years, that 5 crore is like 50 lakhs, 50, 60 lakhs. If you were to discount that with like 6-7% discounting rate. So, because when you reach the 5 crore after 31 lakhs, in today's term, it will be 50-60 lakhs. So general suggestion that we give to a lot of our investors is, with every passing year, assuming your income is increasing, you should step up your SIP amount so that when you actually achieve at the end of 31 years, is the actual 5 crores in today's value and not at that point of time's value.
Okay, the interesting part of this query was also a very specific time period for which she wanted this money to be invested and the kind of return she was expecting as well. So take your point there. The next one is actually a call we are getting from Prasad Pulipati. He's calling us from Bengaluru. He's invested in multiple funds including Mirae Asset Emerging Blue Chip Fund and DSP Nifty Midcap 150 Quality 50 Index. Mr. Prasad, please go ahead with your query.
Hi, thanks for that. I have this plan to invest, to remain invested in these mutual funds for the next 10 to 15 years, where we can start business. I'm working in IT currently, and my wife as well.
Okay. Okay, all right. So you want... Yes, please go ahead.
Yeah, I would like to know whether if these are good enough to have good returns or any other changes needs to be done for this.
Okay. Okay. All right. Anand, your take. There are multiple funds. There is a tax saver. There's Blue Chip. Again, we have a Parag Parikh FlexiCap fund here with the amounts mentioned as well, what he is doing as SIP every month. What do you suggest? The time frame is 10 to 15 years.
Look, firstly, I'm very happy to see people who are looking to invest for 10, 15 years in SIP. So that's, I think, all this learning is actually, making people aware that long-term investing is the way to go. However, when I look at his portfolio, and this is more my personal view, that if you want to invest in mid-cap, probably an actively managed mid-cap gives you better alpha than a passively managed mid-cap. So, maybe you can shift some of your money from the current mid-cap scheme that you have to maybe a Edelweiss mid-cap or a HDFC mid-cap. Maybe you make better returns than actively managed mid-cap. On the other hand, given that your tenure is 10 to 15 years, you're still very heavy on the large cap category, where we've seen that, over a longer period of time, mid and small cap give higher returns. So maybe you can look to balance some of your existing investments into a mid cap and a small cap fund. On the mid cap, I just said, Edelweiss, HDFC, and on the small cap side, we like Kotak. So maybe, if you move there, your returns can be higher if you're still going to stick to the 10 to 15 year timeline.
Okay, all right. Some interesting comments coming in there, Anand. We need to take a short break, but on the other side, more queries lined up. Stay tuned. Welcome back. Well, you're still tuned into Mutual Fund Corner. We still have with us Anand Dalmia, who's the co-founder and chief business officer at Fisdom, to answer all of your mutual fund queries. Well, we have another caller now. We have Gopika Mishra, who calls in from Bengaluru. She's invested in a total of 29 funds and wants to reduce the number of funds in her portfolio. Gopika, hi. Thanks very much for calling in. Tell us.
Hi, guest. So I have invested in around 29 mutual funds, and what I'm looking at is, a mix of 6 funds that cover equity, debt, gilt, but really want to focus my portfolio down. So just want to hear your thoughts on that.
Okay, well, Anand, over to you then. Gopika has 29 mutual funds, which she's currently invested in. She wants to taper it down. She wants exposure across asset classes as well, across equity and debt. So what would you recommend, and which are the funds that you would tell her to look at?
Well, I think it's a good initiative because, Gopika, when you over-diversify, it doesn't really yield the results. So generally, as a rule of thumb, depending on your asset allocation needs, I would say, you should choose one large cap fund. You should choose one mid cap and one small cap. In large cap, you should choose an index fund. So, like I've been saying, passive for large cap. Maybe you should look at an ICICI Nifty 50, as an index fund for your large cap. Mid cap, you can look at Edelweiss, and for the small cap, you can look at Kotak. You can also look at for international exposure. You can look at an Aditya Birla, Nasdaq for your international allocation, maybe 10%. And for the remaining amount, which is your debt allocation, you can look at a dynamic bond fund, which can be a Bandhan or an IDFC, as we better know it, dynamic bond fund. And for your gilt, I would prefer the SBI gilt fund. So with these 6 funds, you would have large cap, mid cap, small cap, international, plus your bond and gilt that you were looking for.
Okay, so that's a well-diversified and balanced portfolio, 60% in equities, 10% that she can invest in international funds, and 30% in debt. And Anand has very helpfully listed them down for us as well. You can see that on our screen, how this can be actually categorized in different segments. Gopika, hope that answers your question. Thanks a lot for joining us. But to the next one, Anup Vinod is writing to us from Mumbai. He says he would like to invest in defense fund and wants to know if it is advisable to invest in HDFC defense fund. Anand, there would be a 2-part question here. First on the query, because there is so much excitement around the defense theme in general, and this is the first ever defense fund that HDFC has issued as well. Is it a good time to look in here, because the SIPs were stopped for a time as well? And also generally on thematic funds, what's your take? Is it something that a new investor, or I would say a person who's just starting investing, look at?
Look, generally thematic funds are for people, who are their risk appetite is higher, and generally for a longer period of time. Plus, you need to catch the cycle at the right time for most of the themes. However, when it comes to defense, I think, this is a structural theme and one should probably look at it, because if you think of it, the first is, the defense budget is increasing. Second is, historically, we used to import most of the defense stuff that we needed. And now the government is making an initiative to, make sure that we are manufacturing it in-house, which is in India. And third is, we now want to export defense. So, even in the last few years, our defense export has increased and is expected to increase exponentially. So all these 3 factors are all long-term, structural, I would say, theme. And I don't see this theme to be so cyclical, because just like any other country, our defense budget is going to increase. So maybe, this is the first defense fund, and as part of your portfolio, it should be a small part. So if you were looking at maybe a large cap fund, you could have 100%, but irrespective of the size that you want to go for, and if it's your first investment, I would say it should not be more than 10% of the amount of money that you're looking to invest. But it looks to be a very good theme, and the fund has already raised more than 1,000 crores, so there is good demand and interest, and I think it's part of the portfolio that one should look at.
Okay, all right. So that's on defense funds as well as investing in thematic funds. We have another query, Anand. Narwala writes to us from Pune. He wants to know what is the right time to stop investing in any mutual fund category. That's an interesting question, Anand.
The most interesting question. Look, most of the people ask about when to start. I would say, look, if you categorize the mutual fund categories, most of the schemes, they fall either in the asset allocation category or they fall in the market cap category, whether large cap or, we talk about balance advantage. And, so we try asset allocation or market cap. Now, these funds actually, you can invest through cycles. You don't have to, try and time these funds. However, the only time that you should think of exiting some of these funds is depending on when do you need the money. Is your goal coming to an end? So what I mean by that is, if you have invested in an equity fund and your goal is 1 year away, then it's time for you to shift from some equity to debt, or maybe all debt, because you don't want to take the risk that on the day you need the fund, the markets are down. So only time you stop these funds is when, you are close to, your tenure of taking that money out, or you've achieved your goal. Then, you have a lot of schemes which are more thematic or sectoral, whichever category we put in. Generally, as I said, thematic funds, one should be very sure of when the theme is starting. Is the theme played out already, or there's still some room for it to be played out? And accordingly, one should enter or exit. One should keep a very small portion of the portfolio into these schemes. But if you feel your theme has played out, for example, if in 2015-16 you started on a technology fund and you felt in 2020 that the valuations were already very high, maybe it was time for you to exit that particular theme. But now if you're holding on to it, maybe it's a good time to continue, because technology, now has corrected quite a bit. And if you invest again for the long term, it's a good bet. So theme all depends on, when you get into the particular theme and what's your view whether it's going to sustain or not. So I would say that those are the two ways in which, one should think about stopping the investments or getting out.
Yes, so allocation and your goals are the most important while you're looking at getting out of any fund as well. That's always the key. Anand, just one more question I wanted to take on multi-asset funds, because there has been a lot of clamor about it after the debt fund change that we saw, also because market are at a record high right now. Do you think one can look at exposure into multi-asset funds and make use of different categories in one itself?
Look, it depends on what your risk appetite is. Like, someone like me will never invest in a multi-asset fund. But, if you want, if you have a moderate risk and you want the best of all the worlds, then, it's a good way to invest in equity, debt, and gold as three categories together. But some of these categories generally have an inverse correlation with each other. So you ensure that, okay, while I don't make the equity returns of 13, 14, 15%, maybe I can make 10%, which is better than an FD. And I'm basically ensuring that if one moves, the other takes care of me. So you are protecting your risk. So again, depends on your risk appetite. But generally, for someone who's looking at long-term investing and has a higher risk, maybe it is not the best category.
Okay. Just wanted your thoughts, Anand, before we wrap this up, about exposure to the entire PSU space. May it be PSU banks, may it be public sector enterprises. Any kind of fund that you would recommend in order to get that kind of exposure? Yes, we did talk about defense, where partly it would probably have some amount of exposure, but a standalone fund which would probably provide that kind of alpha.
Look, I would say, with disclaimer that I, as president, we work with 5 PSU banks. So, I always have a lot of insights into what's happening in these banks because they are our partners. And I can tell you that, we see a structural change in the way PSUs operate. So as personally, I would say I'm quite bullish on the PSU bank space and PSU space in general, because the way, now the management of these companies is being done, it is very different from what used to happen in the past. And that is reflected in the profitability growth or the, I would say market positioning of some of these companies. Historically, that was not the case. The government is taking a lot of corrective measures through putting in the right governance, getting the right people on board. So I would say PSU is a good thing. Maybe a good way to play it is play it through one of the mutual funds, which is focused on the PSU theme or PSU bank theme. That is a good way to play this thing. But I think it's a good time to, get a piece of the PSU also. Also on the value side, they have not gone up as much as some of the other stocks or sectors, and it may be a good time to get a part of your exposure to the PSU thing.
Okay, all right. Anand, thank you so much for joining us today and patiently answering all the queries that came in. It was really helpful. So we'll be speaking to you soon again. But with that, we'll take your leave on this edition of Mutual Fund Corner. But do remember to email us your queries and we'll address them with our experts. Leaving you with some market opinion from Sridhar Sivaram, who's the investment director at Inam Holdings. Stay tuned for Closing Bell to take you through the last hour of trade.
So the early EVs will come, or we are already seeing, some of these moped type two-wheelers floating around in the suburbs. They're disrupting the 100cc more than the higher end. That goes for almost everything in the, or I would say to a large extent in the auto space, that the higher end seems to be doing well and the lower end is struggling. There is every data point that we get, companies that we speak, there is slowdown in consumption, but I think that's a space worth watching, which is the entire manufacturing space. I think India's coming of age as far as manufacturing. We've been hearing this thing that, India's potential of manufacturing. I think finally I'm seeing, on the ground, things really shaping up.